So we're going to look at the fast cash burn rate.
Okay. All right, so I'm gonna share my screen here. And yeah, so the question had to do with the um this particular report, the fast cash burn rate report. Um and and you know asking about like what the criteria is to make it onto this report. So on this particular report, the fast cash burn rate, it looks at the stock's uh, SEC filings. So the stocks report is their financials once a quarter with earnings, and they file their financials with the SEC, and um, part of that is that they tell you how much cash they have on the books, right? And then they'll tell you how much cash they're spending and how much cash is coming in. So there's like this cash flow statement. So when you spend, where does your cash come from? Well, it could come from earnings, right? So if you're making enough enough earnings and profits, uh, and you're spending at that rate or lower, you're covering, all your outlays based on the earnings. But not every company, always makes enough profits based on what they're spending. And if that's the case, well, you'll have to use other sources of cash available. Usually, you have excess cash somewhere in the bank, like or cash equivalents, like treasury or something that you could go tap into and use that. So if you're not covering all your expenses through your sales and profits, you'll have to go into your savings, just like anybody else. The company works the same way. And this particular report is looking at these companies that filed, right? So you have 950 right now that made it into this list. And it's looking at, well, how much on average are they burning enough, cash? So if you take the average monthly burn rate, I mean, they're not covering that, and they have to get that cash somewhere. Right. So you're spending it, but you're not covering that. And then it's comparing it to how much cash you have on books. So this CEG looks like, on average, it's been spending or burning about $459 million worth of cash on a monthly basis. And it has 383 million cash on the books. That's what they reported on their filings. Well, unless they have more money coming in from somewhere, maybe they have money from some sale of an asset, or maybe they sold a product and they have more money coming in, um, or or they have enough money on the books. If they don't have enough money, either they have to stop spending that much, right? Or they have to go and raise money, right? You have to go out there and sell bonds, sell stock, borrow, from somewhere, but you have to make up the difference, just like anybody else. Like if you're, if you have, if your salary is X amount, $100,000 a year, but you're spending $150,000 a year. Well, where are you getting the extra 50,000? Well, it has to be either in your savings, right? or you're borrowing, maybe you get a loan or second mortgage, or so it has to come from somewhere. So if you don't have that in a bank, let's say you had it in a bank and all of a sudden, now you're down to very little savings. Well, either you have to stop spending it, you have to make more, or you have to go borrow, but somewhere you have to make up the difference. So that's what this is looking at. We're like, well, if we just look at what you're burning, and if you're burning, you know, quarter after quarter or month after month, so I think that maybe let me see if I listed it here. We could even take a look at this, but if you continue to burn, right, to burn through those savings, well, then the risk is you're going to have to go borrow more money, right? You're going to have to take on debt. You're going to have to sell an asset, or you're going to have to dilute your shareholders and sell more stock, right? Those are like some of the options out there and some of the risks. So if you sell assets, well, do you have enough assets to sell? Well, here, you have $11.4 billion in shareholder equity. So they have a decent amount of assets, right? Maybe they could just sell something and cover and raise cash, or even borrow against it, or whatever it is. So they are showing on the books that they have, assets that they could tap into. They have $11.4 billion in shareholder equity. Here's 3.4 billion, 41 billion. So even though they're burning through cash, it's not great, right? That's not because you want to, and sometimes you can burn through if you're making investments. So by the way, if you are making investments, it could be justified because you're burning through cash, but you're making investments that you think you're going to uh, recover, or make profits on those investments in the future. It's okay. But if you're just burning through cash because you're not covering your just daily operating expenses, turning on the lights, electricity, or you have a factory, you have rent, you have all these expenses, but they're not necessarily investments if they're just kind of just expenses that you're spending on your daily operations. You have to go in there and look at it. This is an initial report just to point things out. And so here, this report, what it will do is kind of just, give you that initial look. Well, maybe take a look at these stocks, see what else is going on, because this is what they're reporting on their financials. So you have, 844 million, about $1 billion worth of, on average, of a burn rate. They do have a lot of cash on hand. I mean, sorry, they do have a lot of cash on hand. They have, $41 billion in assets. And even at this burn rate, if nothing changes, you have 27 months. That's your runway. So you got a while to go. So maybe that's okay, maybe it's not, but it's something to take a, look at, especially if you're analyzing, particular stock. Uh, then there's other ones, you have not a very long burn rate. You have here, you don't have a lot of time. CEG, where they're gonna have to, they do have assets there, so it's fine. Maybe they are fine, but here you don't have a lot of time. Here you don't have a lot of time, less than a month. And I don't know what this is, but you have, you know, a negative shareholder equity. You got $153 million, on the books, and you have a burn rate of 162 million a month. So this is an auto manufacturer. Maybe it's something to consider, because in auto manufacturer, you got factories, you got workers, you got all these people that your fixed costs that you're paying, right? So you got all these fixed costs now. Um, you know, and if you're not selling cars, you still have to pay, those that cash could still, be burnt. You're still burning, right? And those aren't necessarily investments that you're making that you're going to get a return in the future. If you just have workers and factories and stuff like sitting there and not selling the product, if you have inventories there, this could be an issue, especially when you have, a negative shareholder equity. So it's something to look into. Well, what's going on here? You know, you have a $9 billion market cap stock. Maybe it's justified. Maybe there's something in there that is not on this report. That could very well be, but that's something, that you'd have to look deeper into. We'd have to dig in deeper, maybe call the company, call their investor relations and ask them what's going on. There's a biotech company, and sometimes in biotechs, that's also can become an issue because sometimes biotech companies, the way they work is, they have a different business model. They work on research and and medicine and discovery of new treatments. But while this is going on, while you're in that stage, you're going to be burning cash, right? You're going to be burning cash unless you come up with a treatment and a medicine that you could either license out or manufacture and sell. If you're in that research phase, well, you're going to be burning cash, and it's not obvious if your research could end up showing that whatever your thesis was, it's not a viable treatment. It's not a viable medicine. So yeah, that research, it's good because it will eliminate, or a thesis, or it'll tell you, like, that this is wrong, but you're going to burn through cash, and then at the end of the day, you're not going to get a return on that investment, on that research. So when you're looking at a biotech, well, you're burning through cash, you're continuing on this research, and it might be vital. It might even lead to something, but if you're running out of cash, you got to go find more cash, right? You got to go either sell stock and convince investors that it's, worthwhile investing in the research that you're conducting, that there could be a breakthrough, and then you'll have a viable product to license or manufacture. Or if you don't, well, what are you going to do? You're going to run out of run out of cash. You're going to have to close down or sell yourself or do something. But that's another risk out there. You're invested in this biotech stock, and what happens is if you issue more stock and to raise money, well, existing shareholders get diluted, right? So now, instead of X amount of outstanding shares, you have X plus another amount of outstanding shares. So now you're diluted in the shareholders will get diluted this way. And more stock will come on board. So these are things that, people within their analysis pay attention to. Is there what's going on with the stock? Is there a risk that they're going to have to go and raise more funds? And then as a shareholder, what does that mean to me? And will they even be able to raise more funds? Because you still need to convince, either whatever you do, debt or equity financing, you got to convince the markets that it's worth the investment. So that's what this is kind of looking at. So we could take a look at, we could narrow this down out of 950. We could come down and look at, maybe stocks with options. So that takes it down to 570. We could look at
Hey, D,
ones with, yeah.
we did have a question from Rob, and he was asking, he wanted to search one stock in particular. I guess there was some news on it today. It was Roblox. I think that's RBLX. Is there a way to search by individual stocks to see if it shows up on the list?
Oh, on this report,
Yeah,
I don't see it. RBLX, it's not
yeah,
on.
I think that's it.
Yes,
So it's
okay.
not on the list. All right, great.
Yeah. So here, I narrowed it down, let's say stocks that have options. Let's say we look at stocks that have, less than 2 months runway, meaning that if they continue to burn cash at this average level that they've shown historically, and we compare that to the cash balance that they reported on their SEC filings, right? So we're going off the SEC filings, and they're saying, well, this is how much cash on average they burn a month. This is how much cash they said that they have on the book. Well, if we just compare those two numbers, that's less than 2 months worth of funds you have available. So those are, those are things to consider, then we could see here just what the stock's been doing. So these are just the indicators here of, well, what have the stocks been doing? So this one looks like it's been on an uptrend. So it doesn't look like the shareholders of this biotech have been concerned about it. Here's some stocks that are on a downtrend. Here's, the option volume in there. The implied volatility ranking just tells us how high the implied volatility is in the option relative to its historical. So if it's elevated, that means that investors are pricing in a potentially higher stock move than historical. So these are just the indicators that we have available to us. By the way, I did forget to mention today we have a webinar at 2 p.m. Eastern, and we're going to be, and that's with Interactive Brokers. So you have to register with Interactive Brokers to go and view that webinar, because they're hosting it. So it won't be, like on YouTube like this one. And we're going to be discussing implied volatility liens. Okay, so that's what the discussion is today, on implied volatility liens, that, we have indicators on our options chain. We'll talk about, what they are, how they could be useful, what they could indicate, and that's today at 2 p.m. Eastern. And Will, if you could put out that link.
Yep, I did. It's in the chat.
Okay.
Rob is asking, is there a way, and I guess the way would be you'd have to go look at the stock's 10K, but is there a way, if the stock isn't on the list, the fast cash burn rate list, is there a way he's asking for Boeing in particular? Is there a way to look on the site to see what Boeing's burn rate is, I guess, even if it's not on the list?
What is Boeing?
I think it's BA.
Okay, so like BA.
Jim already looked and he said it wasn't on the list, but Rob is asking somewhere individually on the site. Is
Yeah,
there a way to see what the
let me see if we could look at the quarterly cash. So here's Boeing, right? Here's the cash flow statement. So you could see here that this here shows the ending cash position. So the green means that there's, it has positive cash, right? It has positive cash. And if it's going down, the bar is going to be trending lower. If it's going up, the bar is going to be trending higher.
Yeah,
Uh,
and remember, this is it looking in the rearview mirror, right? This is like the
it's
this is the last 10K. So
exactly. So we don't know what
if
it's
in the
going to be.
news they're out looking to raise cash, it's because things have dynamically changed inside the company, right? They're
Yeah,
need to,
this is based on quarterly statements that they're filing. So these aren't like updating minute to minute. No, we don't know that. We only know what they file with the SEC. But here, it shows us that their operating cash flow looks positive so far, right? So whatever cash they have based on, you know, um, profits and expenses from their regular operations looks positive, which is which is good. Um, here, here I'm just going to slide down. They have investment, so it's divided by operating cash flow, investment cash flow, and financing cash flow. Let me just make sure this is, you know what, this is looks backwards. So this is going, I got to look at this. So sorry, it is negative. So these charts are actually going, instead of going from left to right, are going from right to left. So it is negative. So you're right. The operating cash flow is negative. Um, they are, let me see. They look like that the ending cash position from first quarter to second quarter increased from 6.9 billion to 10.9 billion. So where did it come from? It looks like, just looking from here, it didn't come from operations. It didn't come from their investments. So it did come from financing. So what happened was they issued $10 billion worth of debt. Okay, so between, March 1st and March 2nd, why did their cash flow move up? Considering, like Rob was saying, well, their operating cash flow is negative. They're not getting more cash from their daily operations. They're losing. So, like we were talking about, well, where are you going to get it? Where are you going to get the makeup of that? Well, uh, you could get it then from investing cash flow, meaning that you sold your investments. But here it looks like they made more investments. They have a negative 2.1 billion. So they made investments somewhere, bought it. You'd have to go look deeper into it, but maybe they bought a plant, or maybe they bought equipment. They made whatever it is. It looks like they made new investments, 2.1 billion. That's why cash flow left. So where did they get their cash from? Well, here it's saying that they issued debt, probably bonds. They probably sold bonds, or you'd have to go look what they, maybe preferred stock. I don't. Oh no, preferred stock would be here. So they didn't sell more common shares. They didn't sell preferred. So they issued, looks like, probably bonds, and that's why their cash went up from 6.9 billion to 10.9 billion. Okay, that's why it went up. So that's Boeing really quick. Hope that helps.
Yeah, that's great, D. That was super helpful. We're right up against the opening bell. Actually just happened. Everyone, remember the link in the chat for today's webinar on volatility liens that will be available starting at 2 o'clock. And as long as you register, you'll have access to the video at any time. And there is a great library on Interactive Broker sites of all our webinars. I think this is like either 35 or 36. Great job as always, D. Thanks for bringing it.
Yep. Thanks,
Thanks for the
everyone.
question.
Yep. Stay safe out there. Have a great trading day, and hope to see you guys later today, hopefully this afternoon or tomorrow.
Yep, great. Thanks, everybody. Bye-bye.